We are effectively looking at this standard from the perspective now of the P&L. Now, once again, I want to talk to you about consequences first. We want to be predictive. We want to present our information in a way which will help the user extrapolate, which will help the user predict. If my revenue is 200,000 and my profit is 50,000, but half of that has come from a business which I have discontinued, I think it is misleading to tell my shareholders my revenue is 200,000. Because if half of that has come from a business that I've now discontinued, if next year my revenue is 120, actually that's a growth. Because it would not be fair to extrapolate on the 200, because the 200 revenue contains figures which we know will not be there next year. So if we have a discontinued operation, no revenue, no costs, no interest, no tax, no profit, we must show the profit, so we bring the profit in as one line at the bottom of the P&L as a discontinued operation. So IFRS 5 is all about being predictive, all about being relevant, all about helping the users understand what's likely to be there next year. So we strip out the results of our discontinued operation and we present those results in one line at the bottom of the P&L as discontinued operation. We have to include them because otherwise we're not complete. We have to tell the shareholders what happened to the business that we've stopped doing, but we do so in a presentation which enables them to find the information useful. So the consequences are single line presentation. The consequences are, a single line presentation of profit after tax. No turnover, no cost of sales, no distribution, no admin, no finance cost, no tax. You strip, leaving revenue to be capable of being extrapolated, leaving profit capable of being extrapolated. We'll do an example in a minute, don't worry. Definition, conditions. If we are looking at a discontinued operation, then we talk about the discontinued operation as being a component of the business. So it's probably a sub or a segment. It's a clearly defined part of the business that is held for sale or has been discontinued in the year. That is held for sale or has been discontinued in the year. So the terms and conditions, it's a part of the business which has been held for sale or has been discontinued in the year and represents either a separate major line of business and represents either a separate major line of business or geographical area, or separate major geographical area. Separate major geographical area. If you're looking at a discontinued operation, you have either sold all of your Vietnam business. If you sell and withdraw from Vietnam, that represents a separate geographical area. Or maybe you sell all of your hotels. You keep your casinos, you keep your holiday parks, you keep your theme parks, but you sell all of your hotels. So if you withdraw from the hotel market, that arguably is a different line of business. So that's the basic criteria. It's the basic criteria. Let's have a look at a small example. Let's move on within a few minutes. But let's have a look at a small example. This one we can have a look at together. And the example that we're going to consider is on page 7.